Hi everyone, and welcome to the Financial Fortune Teller podcast with me, Mark Seddon. And today we have special guest. Shall we call you in the hot seat?
Yeah.
We've got Morgan, our protection advisor over in Hitchin. And welcome.
Thank you. Thank you for having me.
We're looking forward to getting you on for a chat around financial security for families.
Yeah.
Ensuring that people have that, I suppose, peace of mind.
Yeah.
And also, we're talking about security. What we're saying essentially is we want people to have a financial resilience, and you're the person to go to for that.
Yeah.
Am I right in thinking?
That's correct.
So welcome. I would love to introduce yourself. Before we come on to that, I just want to say today, Pen Watch. We bring a pen on every podcast. We've got Guardian. Guardian's actually a fantastic provider for ourselves. We had Guardian in last week, didn't we?
Yes, we did.
We had I think it's Paul, business development manager. And their proposition when it comes to the likes of life insurance, critical illness cover, income protection, absolutely unreal. So hopefully we can get Guardian on the podcast so they can actually talk about their proposition directly to our listeners. So yeah, Pen Watch, Guardian. But let's get on to Morgan. How are you today anyway?
I'm good, thank you.
Fantastic.
Not bad for a Monday.
Okay, so can you tell me a little bit about what you do for local individuals, local families, and what is a protection advisor or a protection specialist for those listening who have children, have partners, whether it's husband, wife, boyfriend, girlfriend, people who are financially secure, not secure, sorry, people are financially wanting to be secure. And what can you do for them, and what do you do day to day?
The aim is just to provide financial security for these people. We want to make sure that everything we earn is protected. We bring money into the house. Sometimes we have a debt with a mortgage. We want to make sure that's protected. We make sure that our family and our loved ones are safe.
Okay. So what you're saying there is there's various different ways to protect your income. And we had a chat prior to today's podcast, and everyone goes to work for a reason, don't they?
Yeah.
Why do they go to work, Morgan?
To earn money.
We do. We all go to work to earn money. Of course we do. Now, if we didn't have that income coming in, and that's because of reasons out of our control, such as, let's say, ill health, accident, sickness, disability, or even, critical illnesses, and we'll go for worst case scenario, God forbid somebody was to pass away, I believe a protection advisor like yourself is the one that, caters for them occurrences and ensures that that income or replacement of income still comes into the household.
Yeah.
Is that correct?
That's correct. We make sure that people's lifestyle doesn't need to change. Things can strike at any minute. You don't know what's going to happen. You don't know what's around the corner. So our aim is to make sure that people are safe, secure. They know what they have, basically.
Yeah. So when you sit down with a client, or you also offer a Zoom consultation, telephone if needed, which is a bit old school, I believe.
Yeah.
I much prefer to sit down with someone and get to know someone, get to meet someone. I'm sure you do. And what is your process then when you sit down with someone? How do you kind of find out about their background, and how do you run through your offering? And finally, what's it going to cost them?
Well, that all depends on the person. Everyone is different from person to person. Circumstances change all the time. But the process would be someone would come in, whether they've got cover already and they're looking to replace it or review it, or they're just completely starting fresh. We would do just a fact find almost. We would look at the client, who they are, if they've got any dependents, budgets. We would take everything into consideration, so we know to tailor our advice to that individual.
Yeah, brilliant.
Everyone's different, everyone's circumstances are different, and everyone's aim in life is different. So we would use this fact find to get to know them, to tailor that advice to them.
Brilliant.
And in answer to your question of how much it would cost, again, that does depend. Life insurance typically can be quite cost effective, but that could also have other factors involved as well.
Okay, and we're going to come on to that today, aren't we?
Yeah.
Okay, brilliant. So, you're talking there about kind of painting a picture, aren't you?
Mm-hmm.
For a client or clients that come to see you.
Yeah.
That could be anything from the working lifestyle, their occupation.
Mm-hmm.
It could be whether they have children or other dependents. It could be whether they've got a partner.
Yeah.
Or of course, you still have people coming to you that are individuals, don't you?
Yeah.
Who of course are still reliant upon their income
Mm-hmm.
to, as you mentioned, pay the bills, meet
Yeah.
the commitments, whether that's the mortgage, whether it's the rents, whether it's the other bills that come with it.
Mm-hmm.
But people also forget that when these events do occur, you still got to live your life. And a lot of people actually probably decide to live it a little bit more.
Yeah.
Because sometimes it is a ticking time bomb,
Mm-hmm.
as bad as that sounds. But if you're diagnosed with a critical serious illness, maybe you just want to make the most of life.
Yeah.
And if income stops, because naturally an employer is not going to continue to pay you, especially long term, or if you're self-employed, you've got no one to fall back on.
Yeah.
These policies are there to kind of, I suppose, ring fence your income and make sure you're not gambling with your finances moving forward. Is that right?
Yeah. And as I said earlier, it just makes sure that your lifestyle doesn't need to change. It's a stressful time anyway, whether it's, again, a critical illness, someone passes away, you're ill and you don't know how you're going to get your monthly income from work. It just gives you that safety blanket, so your lifestyle doesn't need to change. You can just carry on as normal.
Brilliant. So you mentioned about someone coming in to see you. We'll do that fact-finding process to establish, I suppose, their needs, because everyone's needs are different, as you mentioned. When you go through your kind of product offering, there's 3 key products, I believe, that you would speak to a client about. Is that correct?
That's correct.
I've done my homework, you see. Can you just tell me what them 3 are?
Yeah. So the first one usually is life cover. That can be for your mortgage. Obviously, you have a debt, you need to protect it. The other one is family protection. Next one is critical illness cover. You would cover yourself for any critical illness that you may happen to get in life. And the third one is income protection. So if you can't work due to being sick, accident, injury, your income gets replaced every month. So you can carry on as normal. You can keep paying those bills. You can keep paying your mortgage off.
Okay. So let's break them 3 products down. So somebody comes to see you. I know you run through kind of a protection presentation, don't you?
Yes.
What's your initial starter conversation when it comes to them 3 products? What do you, I won't say, no, I'm not going to put you on the spot and say what you put into the top of the pile, but what's the initial discussion around?
I think for me, obviously, if there's a mortgage there, the main need for me is to protect that debt. But again, if somebody is on a single basis, they live alone, they don't have a mortgage, they don't have any dependents to rely on, it would then be tailored to how would you continue to pay your bills, live your life, just be financially secure if you were out of work. Okay. And I think that's the main question for every client that I speak to, regardless if they have a mortgage, the debt, or anything like that. It's how would you pay your bills if you were out of work?
Absolutely. And I'm sure many people have got them concerns. We mentioned about employment. Employers offer sick pay, and that could be for a period of time, can't it? And it tends to differ from one client to the next. Over the years, I've had many clients that have received 6 months full pay, 6 months half pay. And that tends to be the likes of NHS workers, your doctors, your nurses, maybe civil servants, even police force. Them kind of occupations do a fantastic job, and they receive them benefits, and so they should.
Yeah.
But in reality, injury, accidents, sickness, especially disabilities, especially, they don't last 6-12 months. They last a lot longer than that. So it could be years on end. So we'd encourage people listening today to really think about the impact of, not short-term impact, but long-term impact.
Yeah.
So maybe ask yourself the question, 5 to 10 years out of work, if your income wasn't there, what's the answer? And really, it's not a nice thought, but picture what that would look like for you, not from a financial point of view, but from a real life point of view. And of course, your finances do back most things you do in life, hence why we all go to work for that reason. So you talked about, you possibly starting with the likes of mortgage protection. If someone's got a mortgage, you're talking about protecting the mortgage. In what sense? Can you just elaborate on that for me?
Yeah.
Are you talking about paying the mortgage off? Are you saying, paying the mortgage each month? What we're discussing there?
So To put it into simple terms, somebody has a mortgage, it's a debt. They owe money at the end, however much it may be. So we would use mortgage protection, which is usually decreasing term assurance. This will go down each year in line with the mortgage. So if someone was to die during that term, the lump sum would pay out so that the mortgage can be paid off, whether it's your husband or wife or you've got children. It makes sure that they don't have to worry about that financial burden of having to sell the house, potentially remortgage, anything like that. It just makes sure that they can remain in the family home.
So that's what it's about essentially, isn't it? It's ensuring the roof over the head for the families, that you don't lose a partner, an individual, and also lose your home.
Yeah.
So mortgage protection is, if you've got a large debt, it's usually maintained, shall we say, through your income and the ability for maybe collectively a joint couple to contribute towards that mortgage. Or it could be an individual who's contributing towards it as well. So you're saying mortgage protection is there to make the mortgage disappear, so they don't have to have that burden. Sounds a sensible decision to me.
Very sensible.
So mortgage protection, how can that be arranged? On for what event? What can people claim for?
Usually, the typical thing that we would see is in the event that somebody dies. However, there are some times where people can arrange critical illness cover within that. So if they were to be diagnosed with a critical illness, that would then pay out as well.
Okay, brilliant. Because critical illnesses, they do tend to last a long time. It's hard to recover from. Again, I suppose you don't want that burden again of thinking, I'm unwell. I'm also got the I suppose the stress that can come with health, but also at the same time financially, and having to maintain your mortgage payments. So that seems sensible starting point for you. So I'm going to agree with you on that. I think that's a great point to start with any client. So we're talking about life insurance though. We're talking about critical illness cover. You did mention family protection or personal protection. If somebody have arranged life cover, let's use as an example, to protect the mortgage debt, did they then need personal family protection?
Again, that depends on the situation, the person, the scenario, but typically some clients will almost insure themselves for a salary, or it can be 3 times their salary, it can be a sum of how much they want, but in the event of them passing away, their family is protected. And this can be used for purchases such as buying a house, school fees, making sure that they are okay, because it's great that we've protected the mortgage is paid off, but then how would the family continue with other day-to-day bills, life? So that is something that we also do as well. You protect yourself.
You know what's on the tip of my tongue here now? I've got a saying for many years. It's you can't eat bricks. Protecting the home, absolute great starting point. But as good as that is, if you've lost an individual, let's say your husband or your wife, God forbid, their income then is no longer coming into the household. So what you're saying there is personal family protection gives you an additional cash advance that is income tax free and lands in the bank account to be able to remunerate for loss of that individual, ensuring that the home is safe initially, but this works alongside that to make sure you can meet your commitments, live your life, as we've talked about as well. Seems sensible. Can that also be done for critical illnesses as well then?
It can be done for critical illnesses. It's something that a lot of people do. Again, you can get critical illness cover. Usually we would say it's your yearly salary. And if you're diagnosed with a critical illness that's within the provider's terms and conditions, you will receive a lump sum payout. And again, this can be used for replacing income, making adaptations to the home if needed. Even small things like parking at a hospital, people don't factor that into
added costs that come with illness. Absolutely. People I suppose do forget about that. And I'd say majority of people don't have that lump sum of savings available to fall back on. Or they may have something, but they can only use it once. And of course illnesses are they offer and they happen many times. So having that financial security in place seems sensible to me.
Very sensible.
So you work with numerous different providers, is that correct?
That's correct.
Okay, so what's the advantage of working with yourself, Morgan? do you charge a client a fee to work with you, to get that advice, to have that bespoke setup as we've talked about? I suppose to solve their riddle is what I would say, and make sure they've got that peace of mind. Are you going to charge them?
No. Everything that we do is, there's no charge involved, there's no fee. The advice is free because it's just, it's a way of giving back to people. There's obviously a commission, but in terms of receiving advice, that's something that we don't charge for.
So for the client, it's free.
Mm-hmm.
We receive a commission from the provider,
yep.
which all clients, I'm sure, are happy with.
Yeah.
And we get remunerated for our hard work
mm-hmm.
and commitment. You should never touch your mic, by the way, when you're on a podcast, which I just did. So I suppose it's a win-win situation, is that, as we talked about, everyone comes to work for a reason. We come to work to do the best possible job for our clients.
Yeah.
We get remunerated from the provider. But for anyone listening or anyone watching on the podcast, why would you not utilize a protection specialist to sit down with you and your family to really establish what your need is, and utilize the ability to work with the various providers you work with? And these are mainstream providers, aren't they? To find who's the best fit for you. Is that correct?
Yeah.
So how would you decide which provider is right for the clients? Because there are numerous mainstream providers. I'm not going to name them on the podcast, but we also have specialist providers as well, don't we? Which we'll come on to, when people have struggled to obtain cover. But how do you find out who's the best fit for, Mr. and Mrs.?
It's exactly that. It depends on the situation. We will do obviously our sourcing. We will use the information that we found from the fact find and work with the client to think, okay, well, this is what you want. This is your want to get from this situation. And I think this is the best provider for that. But there are other factors such as underwriting.
Okay. So we're going to come on to underwriting. What I'd like to stick with is that, various different providers, life insurance does exactly what it says on the tin, doesn't it? So essentially it's about cost.
Yeah.
It's about making sure it's the most cost-effective provider, so that as you pay a monthly premium as a client to ensure you've got that financial security, maybe it's to protect the mortgage or over and above, like we talked about, that you're not paying over the odds for that. Critical illness cover is different, isn't it?
Very different.
So all providers offer, I suppose, a different proposition by means of the key features that they offer. So as a protection advisor, and especially, you understand that criteria, don't you? I suppose, am I right in thinking that certain providers are a better fit for certain clients? And also, let's be honest, as advisors, we'll find providers that I suppose we have a bit of a passion for.
Yeah.
And we feel, they're very good at this, or they deliver on this. And also the recommendation that you're making is comprehensive. So you can, I suppose, also have peace of mind that you've done the best possible job for the client.
Yeah.
So just tell me a little bit about that. So the providers offer their own kind of key features for critical illness cover, I believe.
Yeah. So usually with critical illness cover, and again, it depends on the provider, but there's sometimes a core product which just covers, a certain amount of conditions. However, they also have enhanced or plus policies as well, which are the standard conditions plus an extra however many. And usually when it comes to critical illness, as an advisor, we would tend to say to the client, go for the best one.
Absolutely.
Because you're just covered for that extra amount. When you're buying your phone, you want to get the best one, don't you? You want to get the best new shiny phone.
Got all the features.
Yeah.
Yeah, so it does a lot more for you. And I suppose that's what you're talking about there with the critical illness cover, is that because it is a security package, you want to know that in the event something happens, there's a better chance that you've got cover for it.
Exactly.
Okay. So critical illness cover, for me, I would agree, we start by means of looking for an enhanced proposition for a client. You don't get paid out on these policies, am I right in thinking, if you get a critical illness? You get paid on these policies if you get a critical illness with that provider's key features. That's what we're saying.
Yeah.
So it's important to gain advice to ensure that it meets the requirements of the customer, for where they feel there's potential concerns, and also you give advice by means of why you feel the quality nature of the policy is right for them as well.
Yeah.
Okay, that's great. So, because there's a question mark then around critical illness cover, I'd like to now come on to the third product, which is income protection.
Yeah.
Now, critical illness cover is fantastic. What I would say is that there's question marks to whether your health will be severe enough to whether you can receive a financial incentive. So if you are unwell and you don't meet that criteria point of the key features for a payout on your critical illness plan, there's no answer, is there?
Yeah.
So that's where income protection comes in, am I right in thinking?
Yeah.
So can you just tell us a little bit about income protection, how that works, what it does, and why I'm kind of pushing you towards, and I am, saying it's an unbelievable product, because I just believe it is.
Yeah.
So can you tell us a little bit about that?
Yeah, so income protection, it does what it says on the tin. If you're out of work due to illness, sickness, injury, you will receive 60% of your salary as normal, so you can carry on with your day-to-day life. You can pay your bills, you can carry on as normal. You don't have to worry about relying on statutory sick pay, as we know that sometimes that isn't the best option.
Well, it's about 100 quid a week, isn't it now?
Exactly.
Can you survive on £100 a week?
I know that I couldn't.
I don't think many people can. No. Don't get me wrong, it's help, but it's not the answer.
No. And it does what it says on the tin. You can go from a budget option to the full term, and regardless, you can claim as many times, which is, I think, amazing.
Absolutely.
Nobody knows in life how long they're going to be ill for. They don't know how many times they're going to get ill. So just having that there is, again, another security blanket to think, okay, if it were to happen, I'm going to be okay.
So how does income protection then differ to critical illness cover? Because we've talked about critical illness cover, like, protecting a mortgage debt, maybe giving you something over and above. Does income protection give you a cash lump sum then for your bank? What is that doing?
No. So income protection is a monthly benefit.
Okay.
Again, it's 60% of your salary, and that is usually concurrent. If you have, for example, a 2-year policy, you can receive payouts for 2 years. Then you have to go back to work for a minimum period of maybe, let's say, 6 months. Then once that's done, you can claim again. Whereas critical illness cover is a cash lump sum.
Okay. So essentially what we're saying is income protection, it's as it says on the tin, it protects your income.
Yeah.
You get paid month to month. Some people get paid week to week, but we'll say month to month. If your income stops month to month, the policy ensures that the money lands in your bank again at the end of the month. Okay. Now, we talked about the 60%. 60% is kind of an industry average, isn't it?
Yeah.
The more benefit you'll want per month, naturally, the higher the premium. And of course, there's other factors as well, such as client's age, health status, occupation, which we'll come on to kind of what will affect the monthly premium that you pay for, shall we say.
Yeah.
With income protection, you don't have to take the maximum benefit, do you? Because not everyone needs that.
Yeah.
We talked about paying for a mortgage, paying for your commitments. If somebody has an outlay of £2,000 a month they need as an absolute essential figure, they can take a plan tailored to that need, can they? Is that correct?
Yeah, it doesn't have to be tailored to your salary. We can tailor it to what you specifically need,
Okay, great. So what that will do is, I suppose, ensure them to have a more cost-effective plan each month, rather than paying for the bells and whistles, shall we call it, or as I would call it, which potentially could become slightly expensive for people. So we can work with customers and clients as well, can't we, to make sure that rather than having nothing at all, maybe have something rather than nothing.
Yeah.
So you've got that financial security.
Yeah. I've always said to clients that some cover is better than nothing, because when you can have it, you don't want it, and when you need it, you can't get it.
Okay, yeah, I love that. That's really good. So you just talked about 2 years there. A budget policy will pay for up to 2 years.
Yeah.
So if your health goes beyond your negative health, shall we say, goes beyond that 24 months, there's no financial security in place again. You're back to square one. So ideally what somebody would want is an income protection policy that pays full term. Would that be correct?
Indefinitely.
So when we say indefinitely, we're talking about up until retirement, would it be?
Yeah, it usually goes to retirement age. Obviously, everyone's retirement age is different. Some clients hopefully want to retire at 60, and some 70.
today,
Yeah,
maybe.
hopefully.
It'd be nice, wouldn't it? Saying that, we'd all get bored.
Exactly,
we all
would.
dream about sitting on a beach with a cocktail,
Yeah.
but after that cocktail's finished,
You'd
I think
want to
we'll all
have a
get
little
back
bit
to
of
it.
something, wouldn't you? So yes, usually it is up to retirement, and the full term plan will just pay out. So if you're signed off work for a long period of time, you are covered.
I love that, because what we're saying there is, without income protection, you're choosing to gamble every month that you're going to be fit and healthy enough to go to work to earn your income.
Mm-hmm.
And it's a gamble.
Yeah, it is.
Because health can happen anytime.
Mm-hmm.
I suppose, it leads us on then to the budget to full term. You've talked about a 2-year option. You've talked about a full term option. Full term option seems what everyone needs.
Yeah.
But not everyone can afford. And of course, people have got disposable income and they've got what they've got. So we just talked about people having something rather than nothing. So a full term plan runs to retirement, we've said.
Mm-hmm.
The purpose of that is, of course, when you retire, you no longer have an income to protect because you've stopped working. A 2-year option, is there other options as well? And, I suppose, do you feel that's right for a customer and a client? And why would that be right?
There are other options. There's usually a 1-year policy, a 2-year, and a 5-year.
Okay.
And these are seen as budget options. However, it does depend on the client. As an advisor, I would say to them, just go for the full term, simply because, again, you don't know how long you're going to be ill for. You don't know, you can't plan and think, okay, well, I'm only going to be ill for 2 years and be fine. Nobody knows. You don't know what's around the corner. So at least having that full term cover gives you that thing in your head to say, I'll be fine.
Yeah.
I'm going to be protected. Whereas, potentially that 2-year plan might come to a close and think, okay, now I have to go back to work and I'm not fit and well enough to.
Yeah. Something I'm thinking there while he's explaining that is that anybody out there listening who goes to work, you should have income protection.
Yeah.
Because you go to work for a reason. And if you're not working, you're not earning.
Yeah.
Let's be honest. Yes, you might receive 4 weeks sick pay from your employer, maybe 3 months, 6 months, 12 months, but your employer will stop paying you.
Yeah.
I think the maximum I've come across from an employer support point of view has probably been 2 years.
Yeah.
Some employers do offer like group income protection policies for their employees as a benefit, which is great. If that happens for yourself, then it seems like you may have the financial security. But let's have a look at that for you, make sure it's lasting that full term. But the majority of people going to work are gambling month to month. So income protection is fantastic in that it just gives you that peace of mind we've talked about today.
Yeah.
And it ensures the cash is in the bank. So again, you can concentrate on your health and get back to work.
Yeah.
Because we all want to be fit and healthy, don't we?
Exactly. And I always say to clients that the best time to get cover is ideally when you turn 18. However, if that's not possible, it's now. Get it while you can, while you're still fit, healthy, young. And if you're not, that's still okay. We can still obviously find other options, but it's best to get it now because unfortunately, as time goes on, we get older.
Yeah.
And it's going to become a little bit more pricey.
Well, you're considerably younger than me, so I'm going to ask you a question.
Yeah.
So why is it the younger generation, or why do you feel the younger generation don't go out and get income protection? Because they're working. Let's say in their early 20s, you get a job, you leave university or college university, you get yourself a job. Their understanding, I suppose, isn't there. I'll answer that for you. But why would you say that, they don't feel there's a need?
I would say that they don't think it's going to happen to them. They think, I'm young, I'm fit, I'm fine, I've still got a long way off until I retire, I should be okay. But you just don't know. Again, as I said, you don't know what's going to strike around the corner. So I try my best to advise people in my age group that, it might not happen to you, but is it worth the risk? It's not. The risk versus reward.
Yeah.
I think I would rather pay to have my income than risk it all away and then it bites me where it hurts.
Do you know what's mad when you really think about it is that the younger you are, the cheaper the premiums majority of the time.
Yeah.
But if you needed to claim, let's say you've got someone in early 20s and they had an injury or an illness that put them out of work indefinitely, that policy could be paying for 40 years. So the risk to the provider that they pay a monthly benefit month on month, year on year, up
Mhm.
to 40 years,
Yeah.
that could be millions of pounds worth of benefit
Yeah.
that will save someone's financial situation in their life. From a provider's point of view, they're giving it for, I would say, 20-30% of the cost of someone who's, say, in the 40s.
Yeah.
So get it done now is what we're saying, isn't
Yeah.
it? Get it done early. And am I right in thinking they lock the cost in?
Yeah. So there's different kinds of premiums, but usually we advise clients to go for a guarantee premium that locks the price in. It doesn't go up, doesn't go down. It only will go up in line with inflation.
I like that. And they got the option for the inflation, is that right?
Yeah.
Yeah, okay. Because people do like to know what they're paid each month.
Exactly.
It seems an absolute no-brainer in the sense that, someone in their early 20s, if you can protect your income for less than, let's say, £10 a week, as an example, that might not be the case if you're a high income earner or you've got certain different requirements from a health point of view, your occupation, high risk. But think about your weekly wage coming in. If you've got, let's say, £500 a month coming in, and you've got £10 of that to come out, so guarantee you've always got your 490. It just makes sense, doesn't it?
It does.
And essentially, in a nutshell, that's income protection.
Yeah.
You pay a small premium to make sure your income is always there.
Yeah. And when you have that, you can still carry on with your day to day. You still get your Starbucks, you can still pay for your Netflix, you can still do what you want to do without thinking, what now? What will happen to me?
Seems sensible. So we've talked about life cover, critical illness, income protection.
Yeah.
Just final chit chat around how to obtain these covers, because I believe it's not as simple as just going out there and getting it for some people.
Yeah.
What we're talking about there is there's an application process that you have to, I suppose, qualify for the cover. We call it underwriting, don't we?
Yeah.
So from an underwriting perspective, we want to talk about the different types of underwriting and how an individual is assessed by a provider to say, we're willing to offer you the cover. And in our terminology here, that is the terms. They're offering you terms so you understand what it's going to cost, what you're covered for, post-application, so you can say, yes, I want it, or no, actually, decide I don't want it. So from an underwriting point of view, I've answered it a little bit for you there, but can you just elaborate for me by means of underwriting and what are the key areas that providers are looking into to make sure that you can be accepted and offered cover?
Yeah. So again, that will usually come out during the initial meeting with a client, during the fact find. But some things that providers look for, typically the thing that I would mention is BMI, body mass index. It's different for everyone. I personally think it's a little bit too dodgy, but depending on your weight, your height, and your age, everyone's BMI is different.
Yeah.
If you have a higher BMI, it can be difficult to obtain cover. That's why sometimes clients just think, okay, well, I can't get it, I'll leave it. But if they come to us, we can do specific underwriting with different providers. We can find out what their BMI is, how much it would be in terms of premiums, and we can find that tailored cover for them.
That's really good. So with height and weight, it's essentially BMI. If someone has a significant BMI, what's the maximum BMI we can cover up to?
It depends on the provider. There's one provider in particular that I have dealt with quite recently, and the highest BMI they can cover is 55.
Okay. Wow. So that that's a significant figure, isn't it?
Definitely.
If we put it into perspective, we're probably looking at, let's say, someone who's 5'10", above 25 stone.
Definitely.
You can get them cover.
Yeah.
Subject to, of course, other elements of the underwriting coming together.
Yeah.
But based on BMI itself, we can get you covered.
Yeah.
So if someone has struggled out there, why would they have struggled to get cover? Is it that I don't know. Why have they struggled to get cover previously?
It's a difficult one. I think usually it can be difficult sometimes going direct because it's just an initial no without looking into it. Whereas when we do the underwriting, we can speak directly to the provider, the underwriting team. We can pass on other medical information that we've been given. We do the work for you.
Got you.
We find the best cover for a price that suits you, and we put in the work essentially.
So what you're saying is that one might say yes, one might say no, one might say maybe.
Yeah.
And a client out there might go to a big mainstream provider trying to obtain, let's say, income protection, life cover, critical illness, and they get a no because of, let's say, BMI, because that's the subject at the moment. So they feel that they cannot be covered at the moment.
Usually they get that no from whichever provider and they think, do you know what, it's not worth it to shop around, to go elsewhere. Whereas typically, if we get it into our hands and we can look at it, the chances are we could find some level of cover for them if we put all the work in and make it easier for the client.
That's really good. I was going to say that really does stress the importance of working with a professional, again at no cost, who will do the legwork of finding who is the best fit for you. Firstly, from a cost point of view, we've talked about that. But if a provider is cheap, let's say, and you go through the underwriting process and you can't get the cover, it was all a waste of time, as we talked about. So it's a matter of most cost effective, but also it gets the right terms, the acceptance for the client. And then, as you mentioned, once you're covered, then you've secured cover, haven't you? You've locked the cover, and the subject to you continue to make your premiums each month, then you'll retain the cover.
Exactly.
Seems sensible to speak to yourself, Morgan.
Exactly.
Okay, brilliant. So coming away from BMI, because that speaks for itself by means of, we can tailor it based on the BMI levels. They also ask questions around health. So we'll do a medical questionnaire with the clients, of course, and we'll talk about things like your health in the last 5 years, maybe any critical illnesses, God forbid, you've had within your lifetime. They'll talk about your family medical history as well. So let's just stick with that latter there, family medical history. They're looking at your parents, brothers and sisters. Before the age of 65, I believe. Usually. So we're looking at critical illness mainly, aren't we? That's happened within that element of the family. Why are they asking them questions around your parents and your brothers and your sisters?
I think usually the provider wants to see what the risk is. There's a risk with everything in life, and they want to look at not only your medical history, but your family's medical history. What's the likelihood of you obtaining something that your mum might have got? Is it hereditary, or is it just happen to be a one-off? There is a risk with everything. So they really do look into and, pull things apart to see essentially if it's worth the risk for them insuring you.
Which is fair enough.
It is.
Yeah, and they're looking for patterns as well, aren't they?
Yeah.
So if you've, God forbid, you've had a father and a brother with a heart condition, or a mother and a brother who's, had a cancer diagnosis, they're going to either want to get you checked out through a nurse screening, or potentially they might exclude that element of that condition in the policy. Which I suppose what I would say is what it is. If you can't get covered for something because of your family medical history, you can still get covered for everything else, can't
you? Yeah.
And I think you need to really, open up to acceptance that you're covered for many things, and many things can happen, and hopefully nothing happens. And it's the biggest waste of money you've ever spent. But when you do, invest in this kind of protection when you need it, it's absolute gold dust, isn't it? Okay, brilliant. So we're talking about illnesses, we're talking about critical illnesses. If you've had, impairments by means of diagnosis within the last 5 years, let's talk about things like mental health. Let's talk about injuries to your knee or your shoulder. A lot of people have bad back. Hello, that's myself, getting old, whatever it may be. Niggles, let's call them niggles a little bit as well. Smaller things that could, even things like COVID, do you know what I mean? Is that going to prevent you getting cover?
Necessarily, it could be a no, it could be a yes. It depends, and that's why we do the underwriting process, because something such as a back injury might not affect your day-to-day life now, or it might. It doesn't. It isn't clear. But again, that's why we do the underwriting, because the provider can say, okay, well, if it's really affecting them now, we might exclude it, but they'll still be covered for everything that they might come across in life. Or if it doesn't affect them as much, they think, okay, well, it might be worth the risk covering them.
There's been a period of time, let's say, where they've gone symptom free. And then they can say, actually, we can see you've recovered from that. Why would we not protect you? And providers are great at doing that, aren't they? And giving cover. I mentioned mental health there, for example. It's something which people are speaking out a lot more about these days, which is fantastic to see. We could be looking at the likes of the anxiety and depression, and even suicide attempts, which people do disclose to us week in, week out, as awful as that is. But you can still get protected. And, we wish everyone the best of health, regardless of
Mhm.
whether it's mental health or not. But people do feel automatically that you can't get protected.
Yeah.
But you can, can't you?
Yeah.
So it's that underwriting process we've discussed.
Yeah.
It's being as open and honest by means of your health over the last 5 years, your lifetime, depending on what the questions of the application for that specific provider are. And then once the terms are offered, am I right in thinking there's no obligation to take the terms?
Yeah.
So I suppose, why would you not find out what you can have
Yeah.
so you can make an informed decision?
Yeah. I think typically, if a client has been declined with a provider in the past, we've done the underwriting and we've managed to find cover for them. It's a no-brainer, really, because we found that niche, we found that cover for them. So you may as well take it while you can.
Absolutely. Take it while you can. I think,
Yeah.
again, I always look for a name for the podcast while we're running through it. And I think that's a good one to touch on there.
Mhm.
And, we was going to come on to some more things today, but I think we've covered off enough subjects for today.
Yeah.
By means of the product offering and how people can, go out there and find the right cover for themselves. If someone wants an appointment with you, Morgan, how do they go about getting in touch?
I do face-to-face appointments if you're in the local area. I do a Zoom, again, telephone. If you don't want to put your hammer on, that's absolutely fine. But you can inquire on the website, give us a call in the office, send me an email. I can attach it to the link and get yourself booked in.
Great. So we'll put Morgan's details either above or below. You see what I did then? Below and above, other way around, above and below. So by all means, reach out and book in. As we've mentioned, there's no charge for a consultation with Morgan to discuss your protection needs, whether that's a review, whether that's a new, fresh protection offering. We're here to help with that.
Yeah.
Of course, I want to say thank you for coming on today.
Thank you for having me.
Your time's much appreciated. Your advice is fantastic. And it's been an absolute pleasure. One thing we do every week for our guests is we make a donation to charity as a thank you for you coming on. So that's on behalf of Fortune Financial. Sorry to put you on the spot. I do that to every guest, by the way. But have you got a charity you'd like us to make that donation to on top of your head?
Top of my head, I'm going to say the Scoliosis Association UK.
Lovely. Fantastic. We'll do that for you. And of course, if you're watching on YouTube, don't forget to subscribe. If you're listening on the likes of Spotify, Amazon Music, or one of the other streaming processes, like, comment, and definitely ask some questions.
Yeah.
The more questions and comments you put on there, the more other people interacting will be able to see them.
Yeah.
And also, we want to give you the answers. So reach out, and we'll look forward to seeing you in the next video or the next podcast. Thank you.
Thank you.